Right. So section C questions, a quick tips there. Always you start with answering the question that you're most comfortable about and confident about. Right? There are two questions. Whatever questions you feel most confident about, start with that question. Then read and understand the requirement. That's very important. Understanding the data that is given, the financial information that's given, that's very important. And then you need to start from notes. Right? When you're starting to do the answer, you start from notes. Right? But before you do the notes, you do create the formats. Right? What are the formats, what the requirements are, create the formats, and you know that in the question they would give you the notes. Where is he? Okay. Okay. Right. So what I'm saying is create a format, and the questions they would actually give you which sections are the notes going to be relevant to. So apart from that, any other figures given there, you can directly pull them to your financial statements. Those are easy marks, right? So grab easy marks from there, right? You get half a mark each just to plug the figure from the trial balance to the financial statements, right? You start from the notes and then you, if there is a spreadsheet working, use formulas to connect and link the spreadsheet. Right? Always use formulas to link the spreadsheet because that's going to make your life much easier at the exam. And workings, show them. Clearly show the workings, right? Now workings, please don't go to do the workings on this scratch pad or notepad or whatever. Don't do the workings here. Directly do the workings in this platform itself. This part is where the working needs to be done. Okay, please don't do the working in the areas that are not submitted. Do the workings in the areas that are going to be submitted, which is this area. B part and C part. There was an issue where it wasn't on the same page, same Excel. We had to go to the other page to do the Excel. This page, the profit and loss. Okay, let's look at that. Section A. Let's quickly look at the requirements and let's see what Azmat is saying here. Right. B is an Excel, yes. The figures are going to be from this. We can't connect it to this. C is an Excel. But in exam setup, if I'm not mistaken, I don't know if the exam setup has changed, but the exam setup, there is going to be sidebars over here that ask you to open the Word and spreadsheet, whatever is necessary, I think, right? If they've given this, I think you should be ready for this situation also. Go. What do you mean? There'll be a side option that says open Word or Excel. Word or Excel. You can't connect like the profit from here to there. No, when you work on the Excel, there you open the Excel, you work on the Excel, there you can do the connections. But I don't know, usually they give, if it's an Excel, they give one Excel, one Word. That's what usually it has been. I'm not sure if they're changing the format from this time onwards. Not sure about that. Like, if I change the profit in it, I have to manually change. Ideally, they give that. I'm not sure why they have not given that. Is it like just like the marking scheme? There's something wrong here also? Not sure. Okay. Right. Requirement A says explain how the discovery of the inventory defects would affect the financial statements. Okay, remember section C question. One question is going to focus on, as we've already done it in revisions, one question is going to focus on the financial statements, either the single entity or group financial statements, and second question is going to focus on interpretation, right? Interpretation also could be for group, single entity, or cash flow statement if it's a surprise to you, right? Yeah, but be prepared, right? Because I've already given your points to analyze that. Be prepared with that, but it's very uncommon. Even cash flow statement preparation also can be pop up as a surprise.
Financing
Activities. Yeah. So be ready for surprises is what I would say. Okay, right. Now here they have given a single entity, meaning probably the next question is going to be a group. Let's look at that. The following scenario relates to three requirements. Mervyn Co. has prepared a draft trial balance. So the first requirement is explain how the discovery of the inventory defects would affect the financial statements of Mervyn Co. Right. The next requirement is statement of profit or loss. The third requirement, statement of financial position. Okay, these are the requirements. Okay. Explain how the discovery of inventory defects would affect the financial statements of Mervyn Co. for the 20x8 financial year end. Which section is that? Last note. Final note says, in February 20x9, prior to the financial statements being authorized for issue, Mervyn Co. determined that some of its inventory produced in December 20x8 had manufacturing defaults in February 20x9. So this is events after reporting period. IAS 10. It's not 2010, it's 10. Right? IAS 10, events after reporting period. So events after reporting period says any event that happens between or after the reporting period but before the final statements are authorized for issue, and that provides further information of condition existing at the reporting year end, needs to be adjusted. If it's new conditions that did not exist, that you don't adjust. So they're adjusting event, not adjusting event. Now here you have to speak from that perspective. Okay, you have to speak from a perspective of it being an event after reporting period. In February 20x9, prior to financial statements default. Taking this into account, the total NRV of inventory at 31st December was determined to be 6 million. None of the damaged inventory had been sold. Right. So now here I'll be giving in point forms what you're supposed to cover. Events after the reporting period. If you identify that correctly, reporting period. Just give some definition what that is, right? Events after reporting period, what does that mean? And then you give some insights as to adjusting versus non-adjusting, right? Then you are going to talk about the effects of adjusting. Now, these are 3-mark questions, so 3 well-explained points or 2 well-explained, the sentences are going to be good enough, right? Effects of adjusting events, right? Then you will have to connect it. Scenario, right? Mervyn Co. identify whether adjusting or non-adjusting. Okay, and then the final is going to be the impact on financial statements, right? So you expand these when it comes to these points, you will have to expand this, right? So first you discuss what this is, standard IAS 10 events after reporting period. Then you talk about adjusting versus non-adjusting, right? Then you show what would be the effects of adjusting events in the case of adjusting, because you identify that correctly. Then scenario, you connect it. Mervyn Co. identify whether adjusting or non-adjusting this case. And then you look at what's going to be the impact on the financial statements. Okay? Okay, impact on financial statements, and here you also will be showing in numbers. Okay, show this in numbers, right? Now let's read this note again. Now here you know the theory part, events are reporting period, adjusting was non-adjusting. When there was condition existing, that's an adjusting event. Now in Mervyn Co's case, it is inventories which had been there, defect had been there at the year end, right? Conditions existed. Now it's providing further information, conditions existing. So that makes it an adjusting event. You identify that properly. And then what is going to be the impact of this? You will have to write down the inventory to the net realizable value of $6 million. What have they identified inventories as? 8,620. You'll have to write it down to 6,000. So you write down by 1,000. So you do that little bit of math there. So you write it down by 2,620. Right? And that effect is going to be in P&L. Okay, expenses. Clear? Closing inventory. So what happens here? So they are asking, explain how the discovery is going to work. So this show in numbers, and impact on financial statements. There you'll show how statement of profit or loss is affected due to this, and how statement of financial position is affected. You bring the value down, closing inventory down to 6,000, and statement of profit or loss, you will be writing it down as an expense. Okay. Right. So you spoke about all of this. Okay. So that should be the structure. When they want you to connect to a standard, always give a small definition. Then you move on to the standard nitty-gritties. Then you connect to the scenario, what the scenario says, what this means in the scenario, whether it's relevant to which technique there, and then you'll have to show the impact on the financial statements, right? And use numbers to explain this. Okay. Right. Next. So prepare a schedule of adjustments to the draft profit listed in the trial balance, taking into account the additional information in notes 1 to 4. Right? From notes 1 to 4, whatever the information, you'll have to consider that in your draft profit. Okay. So you'll have to do each of the note as a working here. So you start off with the draft profit, right? Profit. How much is that? 4,500, right? No, always use abbreviations as little as possible. Better to use. I mean, draft profit is good to do, right? Draft. Yeah. Right, but it's not recommended to use a lot of abbreviations, right? Right. Then there are going to be workings based on the notes given, right? So working reference, right? Working reference. Keep a space for working reference. Okay. Working reference. Keep a. I'm calling it working reference, WR. Okay. Right. Let's start reading the notes. Note number 1 says, Mervyn Co. has been constructing a second factory since 1st of January 2007. On 31st August 2008, the construction of the factory was completed, and at this date, it was ready for immediate use. At 31st December 2007, the carrying amount of the factory under construction was correctly calculated at 8 million. The costs incurred in the current year were as follows, right? Current year, there has been further costs, right? How much? 8 million.
That's last year, right?
Correctly, at 8 million. Yeah, the current year, they've given the cost schedule there. Materials, labor, and subcontractors. Other direct attributable overhead costs, administrative overheads, right? So those are the additional cost references that they have given. Now in this, you need to identify what is going to be capitalized, what is going to be expensed. Okay, all the above cost has been recorded in the factory cost account in the above trial balance. Factory cost account. So they've taken that as a cost, right? Factory cost account, right? So when you're pulling it, you have to be careful there. Then they're talking about a specific loan of 18 million was obtained in 2007 to fund the construction of the factory, and it carries an annual rate of interest rate of 10.5%. The loan was still outstanding at 31st December 2008. All interest on the loan has been recorded as an interest expense in profit or loss. Right. So what happens here? There is IAS 23. Right. What does IAS 23 says? Any interest, specific interest that has been obtained for construction, acquisition, or production of a qualifying asset, you will have to capitalize that. Right? You're going to capitalize that. Right? So, what is, let's go to the working one. Borrowing cost. Working one. Factory. Factory initial cost, right? What has been the capitalized cost in 20x7? 8 million, right? Okay. Then materials, labor, and subcontractors, that's direct cost, direct attributable cost needs to be capitalized, right? Materials, labor, etc. You have to capitalize 5,000. Then other directly attributable cost, IAS 16 says you have to capitalize. Now this is for a construction, right? Costs incurred for a construction, 2 million. Okay. Administrative overheads, will you be recording that here? Administrative overheads are not recorded, they are expenses that you'll be showing here. Admin cost.
I was in 2 minds, but then I thought they would have included it in that table because it's direct.
Minus 500. So be careful when you're reading, you have to be very careful when you're reading it, right? What's the other item that you need to
Interest.
capitalize? Borrowing cost. How will the borrowing cost work? 18 million is the loan, right? So 18 million, 10.5%. When did the construction start? Right? On 30th, the construction was completed on 31st of August. So this year, in 20x7 was when it was obtained. So January, right? Jan, Feb, March, April, May, June, July, August. 8 months. 8 months of cost you'll have to capitalize, right? Whatever you are going to capitalize here, you are going to remove from your profit because they have recorded entirely in the interest. So draft profit has already calculated those interest. Borrowing cost. What is going to be the formula? Yeah. 18 million into 10.5% into how much? 1,260. 1,260. Right. So what do? Go here. 5,000 and 2,000. Yeah. 5,000 capitalized. They have said that they have included the factory cost. Factory cost, have you recorded that yet? No. We are looking at draft profit. No. In that item, there is draft profit, a separate item. We are choosing draft profit. Factory cost is not selected. We are not going to do any adjustment. We'll be doing the adjustment, but that's not recorded on draft profit. That's shown separately. Okay? Understand that. Borrowing cost.
So, but then we have to make the retained earnings adjustment.
Minus 1,260 equals minus 1,260. You are correct. We have to add that. Why? Because we have already recorded in full. So we have to reverse that 1260. Okay? We have to reverse that 1260, which is going to be the borrowing cost. What's the working reference? 1. I always give the working reference so that your examiner can always go back to the working and can refer to the working and see whatever, even if the old figure rule applies here, even if OFR comes in through your working, they'll understand, okay, which step you've gone wrong, you get a wrong mark there, but for your own figure, you will be getting the future marks. So always show the workings. Okay? I did not check the marking scheme. Should, yeah. Borrowing cost is 1.5 marks. Right? Borrowing cost gives you 1.5 marks. Okay. Right. So what is your total factory cost? Factory PPE. How much is that? Equals sum 16,260. 16,260. Right? Okay. Now tell me, what is, now this is a carrying amount, no? Carrying amount of factory, right? Carrying amount. 60?
So don't you have to add last year's interest?
Profit or loss would you show the last year? When have they taken the borrowing? When had the borrowing happened? 20x7. This is only they've borrowed the funds. Now, why will there be an interest last year? When is the year end? It's 31st of December x7. When did they take the borrowing? X7. What does the question say? Specific loan was obtained in 20x7. So why will there be a borrowing of interest expense last year?
So if it's 20x7 and the year end is 20x8 this year,
Yeah.
because December 20x8,
Hmm.
then the interest is taken in 20x.
But 8,000 they've already capitalized, they're saying. Should be correct. No? So here, correctly calculate construction factory. Carrying amount of factory under construction was correctly calculated. So they would have already calculated that. Alright. Specific loan obtained in 20x7, though loan was still outstanding, all interest on loan has been recorded as an interest expense in profit or loss for the period. Right?
Based on that statement, I took last year's expense and added that too. Because they had the expense.
No. No, you will not be doing that. Right? You will not be doing that because you... A specific loan of 18 million was obtained in 20x7 to fund the construction of the factory, and it carries an annual rate of interest rate of 10.5%. The loan was still outstanding at 31st of December 20x8. All interest on the loan has been recorded as an interest expense in profit or loss for the period. Are they talking about statement of financial position, whether it was capitalized or not? Yeah. They're not talking about the statement of financial position, right? Don't assume. Yeah, so have they spoken anything? They're just speaking about profit or loss only. Are they speaking about statement for financial position? No. You can capitalize and you can expense also. They would have capitalized, they would have expensed also. Never know.
So for this reason, like, the capitalization was wrong. But then last year's retained earning balance, I added the interest to that. Last year's interest, I added that to last year's retained earnings.
Why did you do that?
Because I presumed it was expense and it should not be expense.
Right. So, when it comes to FR exams, look at the information that is evident, that you see. Right? Don't go to assume. Have they told here that last year financial position, this was a figure, that was a figure? No. Right? In 20x7, are they saying when was it obtained? How are you going to calculate then? What basis do you calculate that? Tell me.
Like the whole year.
How can you calculate for a whole year? It's obtained 20x7. You can't calculate for a whole year, right?
Like I took it because they said all interest on the loan. All interest on the loan.
All interest on the loan. Those are all assumptions, Azmat. Does it make sense what I'm asking you? How are you going to quantify that 20x7, which month they took the interest?
Be at the end of
Are they saying that, yeah, it could be at the end of the 20x7. Had it been at the end, we will let it be recorded. So don't assume. If the information does not give any of those, don't assume. Okay?
But then, like, I thought like they were like trying to be tricky.
They won't be tricky at that point. If they are tricky, that will be evident here. Is it evident? Had they given the month, they are being tricky and it's evident. They've not given the month. No? So don't assume. Okay? That's where you go wrong. Knowing too much and trying to do too much is also going to cost you marks. Okay? Right. Now, depreciation. How are you going to calculate depreciation? Mervyn Co. depreciates building over 20 years. No entries have been made in respect of factory in 31st December 20x8. Right. So the construction was completed on 31st of August 20x8. Right. September, October, November, December. 4 months.
So then would I get marks for depreciation?
Yeah. If your carrying amount is wrong, depreciation, if you're calculating it in the divide by 20 and multiply by 4, you're getting marks there. Divide by 20 into 4 divided by 12.
I got 18,650 divided by 20 into 4 over 12.
Own figure rule, right? You'd go wrong where you went wrong at, but you're getting own figure rule. Okay, so 271 is going to be your depreciation.
I got into decimals, then I was so confused.
Depreciation is going to be deducted, right? Depreciation is deducted from the adjusted profit. Okay, so that is the first note. Done? Depreciation gets you 1 mark. Right? Depreciation calculation gets you 1 mark. Borrowing cost gets you 2 marks. Not 1.5, 2 marks. Right? Admin cost adjustments gets you half a mark. Right? Depreciation gets you in total 1.5 marks. You'll get 1.5 if you would have posted it correctly to your financial position PP carrying.
Then my wrong, right?
No, but line by line. So it's line by line marked. It's not going to be overall marked.
What do you mean?
Profit, property, plant, equipment, if that is correct, correct. Balancing doesn't matter there. Okay? Right. As far as you've taken the figures and shown the workings. Now, sometimes in working, you show all the additional working and returning, you deducted that part. No? That sometimes might not score, but you've selected all the other numbers that are relevant. Right? So, although your final answer is going to be wrong, their final answer would not be what they are looking at. They are looking at the points that you picked at. Right? So, maybe you'll get a full marks there for retained earnings. Right? So, always show workings. Workings is absolutely important if you want to get through this exam. Okay? Working is absolutely important.
Where would my mistake cost me? Taking the interest.
It would cost you at rate and earning calculation. So step by step you'll get, but the final figure you might go wrong. Right? Because profit that we're adding, profit there is a difference there. No? So that would be where you would go wrong. Yeah. Okay?
Yeah.
Right. Now tell me, how is this going to be affecting my SOFP, non-current asset, PPE, right? Non-current asset, PPE. So here I'll be taking 16,260 minus 271 as one of my property plant equipment answer, but there is a PPE given here apart from that, 36,000 at that. 36,000 plus 16,260 minus 271. That's going to be your PPE answer. None.
Doesn't the 26,000 have the 8,000 included?
Which 36,000?
The PPIM have the 8,000 included?
Yeah, that's correct. So 36,000, they've given that 8,000, right? So
Minus.
correctly calculated, right? Which they are in this. So you don't need to minus. So in that case, what you'll do is 36,000 and you pick only the ones that are missing. You add 5,000, you add 2,000, you add 1,260, and you minus 2,271. Yeah, so that also is possible. You deduct 8,000 and add the entire working number 1. Okay, that also you can do. Or you can go and 36,000 plus 5,000 plus 2,000 plus 1,260 minus 271. That also can be done, right? Because 8,000 already there in 36,000. Okay, right. Is that clear? Right. Moving on to note number 2. The revaluation reserve relates to Mervyn Co's head office. At 1st of December, it was discovered that the head office had been damaged due to a storm, resulting in an impairment loss of 2 million. This has been included in the calculation of draft profit before tax and is reflected in the carrying amount of property, plant, and equipment. What happens there?
I had no idea. I didn't make any adjustments.
Hmm? You didn't make any adjustments. Why did you not make any adjustments?
I think I should have.
What they're saying is revaluation reserve relates to Mervyn Co's head office. At 1st of December 2008, it was discovered that the head office had been damaged due to a storm, resulting in impairment loss of $2 million. IA 16 PPE revaluation. Tell me how is that adjusted? How is that recorded? Tell me. IA 16 revaluation. Where is it recorded? Other comprehensive income, right? Go up. Revaluation reserve note number 2. Meaning there is already a surplus of 1,600 in that. So you have to minus 1,600 from here first. Then you take the additional 400 to your PNL, not entire 2 million. They've taken entire 2 million to PNL. Okay?
But then they say that they don't make the transfers, right?
There is no need of that.
I mean,
right? See, this has been included in the calculation of draft profit before tax and is reflected in the carrying amount of property, plant, and equipment. Depreciation on the head office has been calculated and recorded correctly. Mervyn Co does not make a transfer from revaluation surplus to retained earnings in relation to revalued assets. There is no transfer option. So that's also a technical nitty-gritty of IAS 16 that is not being applicable here. If that was applicable, the revalue depreciation would have to be removed, but that is ignored.
So they were talking about the depreciation.
Of course, the transfer happens is the IAS 16 when they talk about transfer, it is about depreciation, the excess depreciation, right?
So I thought like.
No, you can't think, Azman. At this point, you can't think. You have to be clear, right? Thoughts and think is going to screw you up. So always look at the number, read it, and remember the standard, what the standard says, and answer accordingly. Right? If they're talking about excess, of course, IAS 16 excess transfer talks about is about revaluation surplus. Okay, the depreciation, the excess depreciation. Yeah. So now what have they done? They have entirely parked 2 million under PNL. So what you have to do, you have to eliminate 1.6 million from there. You have to only record 400,000. What do you do? Draft profit, revaluation loss that you've done, you'll have to eliminate, plus 1,600. Okay, and then where will this be adjusted? In your statement of profit or statement of financial position, revaluation surplus becomes 0. Why? 1,600 minus 1,600. That's how you make it 0. Okay, right. Is that clear? Third note, Mervyn Co estimates its provision for warranties based on past experience. The provision for the current period has not yet been calculated or recognized. The information below has been compiled by management for the purpose of calculating the required provision at 31st December 2008. Okay. What's the provision? Opening provision given here. 5,000 is the opening provision here, right? They've given the opening provision. Working, let me do working 2. Opening provision, they've given how much? 5,000. Closing provision, how much is closing provision? How do you calculate closing provision? They've given you the percentage, right? Right. Units sold into probability of defect into expected cost to remedy is going to be your provision, right? So what's going to be a closing provision? Show the working, right? How much is that going to be? Equals, let's do for product A and product B. Product A, product B, right? How much is it for product A? 25,000 into 15% into what's the expected cost? 32. Okay. And then for product B, sorry, 25,000 into 15% into 32. Okay, fine. And product B, how much? 1.1 million. We were doing in thousands, so let's do it in thousands itself. That's what is confusing. Yes, that's what is confusing. Very cool. What happened? Hmm? What happened right now? That was crazy.
Control Z.
Control Z doesn't work here. That's why doing it in Excel for education purpose is better. But anyway, we have the figures in a working reference. So workings, they all can refer to the recording. Working reference. Draft profit. How much is draft profit given here? Draft profit given was 4,500. Right. Then what were the adjustments? Admin cost adjustment was done. Admin cost, how much was the admin cost that was added? 500. Right. Then what adjustment did we do? We did the borrowing cost. Yeah, you can call it interest reversal. But give the reference. How much was that? 1,000 to 260. And then depreciation. Depreciation was 271. Depreciation, again working 1, 271. Then revaluation. Loss. How much is that? 1,600 plus. And then what were we were looking at? Provision, right? Okay. Opening provision. And then closing provision. A, B, 25 into 0.15 into 32. Then 1,100 into 0.3 into 18. How much is that? This plus this, 6,060. How much is the opening provision? They've given the opening provision here. 5,000. Closing provision 6060. So what is going to be the provision for the year? Difference 1060, right?
How many marks did you put in?
1060 is the provision for the year. Again it went, right?
You have the cut button. You can press it.
This one?
On the top next to the paintbrush.
No, that's not working. Then right, there's something wrong here.
Better go to Excel.
Yeah, better we'll do it on Excel. So you'll know how to look at it from a holistic perspective, right? Okay, 1060. Let's just do the draft adjustment, and then let's do the financial statements in Excel. Okay. What was it?
I took the opening balance in this.
Let me share the Excel.
Opening
Plus, let's quickly look at the figures here. Draft profit was 4,500. Then there was admin cost. How much was the admin cost? Can you quickly tell me the figures? Minus 500. Then there was borrowing cost 1,260. Depreciation 271. Then there was reversal of impairment loss. That was 1,600. And then provision for warranties for the year 1,060. Give me a second. Let's do the final note and I'll tell you the marks breakdown, right? So in February, prior to the financial statements being authorized, there is an inventory write down. How much write down? 8,000. 8,620 becomes 6,000. So you have to show inventory write down of 8,620 minus 6,000. That's 2,620, right? Equals minus 8,620 minus 6,000 minus 2,620, right? Now let's look at the adjusted profit for the year. Are they asking you to calculate taxation? No, right? Then why do you need? Sum this is your adjusted profit 2,909. All right. Bold. That's your adjusted profit. Okay. Now you know each of these items, how they are going to impact your different financial statements. Okay. Now what's the third requirement here? Let's quickly go and look at the third requirement. And let's prepare or fulfill the third requirement also. Statement of financial position. They're not asking profit or loss. They're asking financial position. Right. So here you can actually create a draft. So creating a draft also and pulling the easy marks is going to help you immensely. Non-current asset. What are non-current assets that we have here? PPE is there. Right. PPE has been given as the non-current asset. And Then there is current asset, where we have inventory, because that's what we wrote down. Then there is trade receivables and cash, right? Trade receivables, and cash, right? That's the current assets. Then non-current, that gives me total assets. Then my equity. I have share capital, retained earnings, revaluation, but you'll have to show that. 0. Yeah, you do the working and you show 0, you get 1 mark. You have to put that, right? Because that adjustment has been done, so you have to show that you are doing that adjustment. So you're getting half mark, I think. I'll tell you the broken. Yeah. Okay, always show the workings. Then there is non-current liability. There is a loan that they've taken, right? So in this, they've given the loan. Loan, note 1, 19,890.
2000. Right?
What?
1,890 or something. The loan.
Why do you need to add?
Yeah, right.
Loans, you don't do that. You do that on finance cost under statement profit or loss. Don't get confused with amortized cost, provisions, and normal loan. Okay?
Why is the loan 90?
Current liability, give me a moment. Current liability, provision for warranties was a working that we did. Then we have trade payables and tax payable, right? Trade payable, tax payable, right? Property plant equipment, how much is that going to be? 36,000 plus, right? 5,000 plus 2,000 plus 1,000, 260 minus 271, right? That is my PPE. Okay, that's my PPE. Inventory, how much is the inventory going to be? 8,620 minus 2,620, right? That's inventory. Trade receivables, is there working required there? No, you can pull it. So there you're getting free, easy marks, right? It's like free marks just to pull it from there. Cash, you get another free half, both are half a mark. So 1 mark there, right? 33,030. Yeah, pulling cash half marks, pulling trade receivables half marks. 1 mark there. So you see, easy, free marks, right? Okay, then that gives you your total assets. What's my total current assets? This plus this plus this. So what's going to be my total assets? Equals this plus this. All right, that's my total assets. Share capital, how much is share capital? I'm getting half a marks there also, 10,000. Retained earnings, there's a working here. How much was the retained earning given? 55,740 equals 55,740. In this, you are going to add 2,909. That's the adjustment that we've done. And then there's dividends paid also, right? 7,240, that you are going to minus. Profit for the year 2,909 minus 7,240, your dividend. Revaluation reserve, so you'll be showing 1,600 minus 1,600. This would be as a working, just showing it separately here. This is how you're supposed to show 1,600, right? That gives you 0. Okay, so total equity stands at this plus this, right? So in the exam, use the sum formula, right? So that would give you your answer. Non-current liability, loan figure has been given, you pull it as it is, right? Loan.
So they haven't paid the interest. They haven't paid it, right? The
For
interest
which,
on the loan, they
yeah,
haven't paid any of it.
they have already expensed it, right? That's already considered in P&L.
Then why? Than 18.
Because there would be an additional loan that they would have taken in the last year, right? That we don't know. Examiner is not
But
saying
then
it.
if I did the other calculations right, so then the additional part came up to the interest for one whole year.
Okay. Right. Then
So like the extra 1,890 would be one whole year's worth of interest. So it was 18 million into 10.5% is 1,890.
okay.
So then they added that to the
Would have. We don't need to do that. No, we don't need to think about that. Are they asking us to do that? No, then why think? Not required. Azmat, that sometimes that's going to cost you. So please don't think too much. Yeah, it has cost you, right? So don't do that. I've already told you during our live lectures, I've told you not to think too much because that's going to cost you, right? Trade payables, another half a mark, free half a mark you're getting there. Tax payable, another free half a mark you are getting there, 2,800.
I wrote it as current tax.
Current tax, yeah, it's okay. Current tax payable, tax whatever is okay. Right, that's my, and this is my total equity and liability. What is it? This plus this plus balancing. Yeah. Equity and liabilities.
Will they give marks forward?
Hmm?
Will they give marks forward?
Do they give?
Marks overthinking.
No, that you will get marks nowhere. Overthinking would cost you only. It won't get you marks. Remember that. Overthinking is not helpful. You have to be critical. That you come to SPR, I'll teach you. Right now, FR is the focus. Focus on FR. Don't think about SPR at this point. Right. So this was one way. Another way you could do is 36,000 minus 8,000 and you add the carrying amount that you had calculated in one of the workings. So in this, let me quickly tell you the mark breakdown. Inventory discussion gets you 3 points, right? So where you discuss all those points, you gain 3 marks there. Admin cost adjustment, in adjustment of profit, gains you half a mark. Borrowing cost calculation, let's quickly put it here, right? Half a mark here, 0.5. Then borrowing cost calculation gives you 1.5, and adjustment in statement of profit, financial position, including that, it gets you 1, 2, right? So working is where you calculate it, and this is where you do the adjustment, right? So adjustment is getting you half marks. So 2 marks here. Depreciation gets you 1.5 marks, easy marks, right? Reversal of impairment gets you 1 mark, right? Then you get, for provision, you get 2 marks, right? Why? Opening balance, closing balance to calculate, just to identify difference, you're getting 2 marks. Just imagine how much good marks, right? Then 1 you get for inventory write down. Do you get for the final figure? No. Final figure does not. For the entire thing. That's good. Yeah, that's good then. 3, 4, 5.5, 6, 7, 8. Yeah.
I didn't get 5, but then you could like get 4 depreciation. And I didn't get 4 reversal of.
Yeah, fine. So you lost 1.5, you receive the rest. Did you attempt section C? Why? You'll be doing today. No use of doing today. Huh? Why July when in December exam? Why do June prima? Okay. So Omar, I would recommend that you go home, attempt the paper, then watch the second questions recording. You can go home now. No, because it's useless. I mean, if you are not going to attempt, you attempt the section, you have not shared the mock either. Even the class mock you have not done and shared. No, there is no time pressure. Nothing is time pressure. If you feel time pressure about this, what are you going to feel in the exams? That's another way of overthinking, overburdening yourself. And that's a problem there. SOFP. Yeah, so SOFP, let me quickly bring you the marks there. So SOFP, PPE gets you 2 marks. This give you 2 marks. Give me a minute. Inventory gets you 1 mark. Trade receivable gets you 0.5. Trade cash gets you 0.5 marks. Then you get share capital 0.5. Right. Then retained earnings you are getting 1.5. Revaluation reserve you're getting 0.5, right? Just for showing 0, right? You're getting 0.5 there. And then loan you are getting 0.5. Provision you are getting 1. 0.5 for this, 0.5 for this. All the 0.5s are free marks. How many 0.5s do we have? 1, 2, 3. 3 marks you're getting free of charge. Right?
For SOFP, I got 4 marks. SOFP only 4 marks.
Why?
I mean, I got a B.
Okay, but the steps, did the steps get the marks? Fine. You 36,000 minus 8,000 and carrying amount is what you've taken now. You've taken carrying amount now. Of your own figure rule, you're getting 2 marks there. You, because you've already been deducted, I mean, you know.
I didn't get it. I got the marks for depreciation.
Okay.
But then I added the 2,000.
In the working, did you show that 5,000, 2,000, 1,260? You showed everything there. Right. So there the answer went wrong. Why did the answer go wrong? Because you took admin cost also as a
Cost. And then I took the interest because of the work.
overthinking part. Okay. So you got that and got that answer wrong. No? Fine. You got the rest of the elements right. Yeah. So I think you should get these 2 marks also.
And then
Or at least you can keep 1 mark there.
revaluation, I got it wrong. 0. Retaining.
Returning, did you use the profit that you arrived at? Yeah. Did you deduct dividends from that? You get that full marks. Yeah.
But then I made another mistake.
Did you take the free marks? Did you get the free marks? All of them?
Then
Loan you screwed up.
alone I screwed up.
Okay.
And then warranty I screwed up.
What?
5,000.
You took only 5,000.
Same
Okay, then warranty you're not going to get marks there. Still you get around 5, I guess. So 5 here, 6 there.
6.
11. And events after reporting period, did you discuss that properly? First A. 1 or 2 marks. Okay, let's keep 1 mark. Worst case scenario. 1 plus 6 plus 5 here. It's 12. 12 out of 20. Not bad. I mean, if it crosses 10, fine, you're in a safe zone. Even your A and B combined within safe zone. This is also in safe zone.
That's the I screw up a lot.
You screw up a lot because of your overthinking. Stop overthinking. Okay? What is going to be the remedy? Stop overthinking. It's going to be the remedy. Right. Now, this one we are not going to discuss in detail. Right?
I get 12. For
Yeah.
each, I guess 1 or 2.
Yeah. Okay, so this question, as I told you, group interpretation, right? Okay, so they've given some information and what they're saying, explain how the contingent liability of Munchco should be accounted for by the Byte group on 1st of January. There is a contingent liability component. The first note, on 1st January 28 said the carrying amounts of all Munchco's assets and liabilities were equal to their fair values. The company had disclosed a contingent liability related to ongoing litigation concerning a food. Now you see this also gives you the contingent liability effect there from the study planner. Please read through that complete understanding of how fair value adjustments work in your acquisition and group accounting component. Part B, GP margin, OP margin, ROC calculations. You know the calculations, you calculate it properly. And when it comes to commenting on the performance, always comment on revenue. Okay, I'm concluding, I'm not taking too much time. So comment on the revenue, GP margin, OP margin, ROCE, give conclusion. And when you're doing this, you have to use all the information that is provided in the case scenario. When you are doing an interpretation, use all the information from the scenario, right? Now the first note talks about the contingent liability, 310,000. There's a litigation at Munchco that is higher than the fair value. So if there's a future impact of that, that would be an impactful. So interpret that part as that. Then individual financial statement reflected revenue. So revenue, you have to show individually what was Byte course, what was Munch course, how well it has been, the acquisition, how well that has been, right? And how much contribution has Munchco done. Then Munchco currently focuses on exclusively manufacturing prepared meals, but it plans to expand its product range in the future to include cold pressed juices. So diversification is happening there. Potential increase in revenue, right? Then substantial research cost, meaning in future there is going to be increased, increased revenue and increased GP margin, OP margin, right? Fourth one talks about revaluation, how revaluation policy is going to change the profit and how that's going to impact the ROC, right? And then for a number of years, Bytequest consider achieved a 10% annual growth in revenue. That did not achieve, so that's a problem, right? You have to indicate that. But why is it organic market, the food is going growing towards, the demand is growing towards organic market? So because the organic company has been purchased, Munchco, future is going to maybe a good future.
I was like 50. There's not much information.
Yeah.
It's about everything's about future.
So future looks good. Currently, it's weak. That's how you need to conclude, right? So you all need to know the formulas, use the formulas, and use all the information that's provided in the case to give the interpretation.
This information. I think I didn't use the contingent liability.
Okay.
Too sure about it.
That's right. Contingent liability. You see, there was a question in section A. There's a question in section B, and there's a question here also, right? That's very important because that's a part that most of them ignore, and that is why I had given in my study plan specifically. And you see how many questions we have it in pre-mock already. So imagine how many. Since it is here, I don't think it will be there in the main exam, but being prepared is always good. Okay, right.
And compared to small time exam, how it will be?
And in some research online because I was wrote it down. Many people say
Mock is difficult than
it's
the
difficult and it's completely, it's like usually going to be different. The exam is going to reflect the mock and it's going to be easy because we've already discussed.
yeah.
Then if we get a consolidation for this,
So in exam, you might get consolidation and single entity, or you might get cash flow, both interpretation. Never know. So be prepared. Don't be surprised at any point. But when you are interpreting, always start interpretation from revenue. Revenue figures they won't give you, but there is some indication there. They are saying 50,000. There's a 50 million revenue. So please talk about revenue. Very important. And a very easy mark, and how the impact, all the impact is around revenue, future diversification, revenue, how all that revenue is a very important. Although you have to touch upon all the ratios you're calculating, touching upon revenue is key, right? And conclusion is also key, right? Whether it's inconclusive, tell that. Conclusive, tell that, right? Conclusion is also key.
Like for this question, I separated like profit margin, PPIM,
Yeah. So always give headers, right? That's ideal. So like I've given here, revenue would be one header, GP margin, OP margin, ROC, then conclusion.
here they have given only 3 ratios. They will not count only on capital.
Comment, better to comment only on that, but consider it in a holistic view. Considering all the information that's provided should be covered. Now, research cost is going to impact OP margin, right? Likewise, revaluation, it's a factory, so depreciation goes cost of sales, going to impact your GP margin, right? Your revenue impacts your GP margin, it impacts your OP margin as well. So whatever impacts your GP margin, it impacts your OP margin as well. ROCE, revaluation, the policy changes reflect on ROCE. If there's more equity, there's more debt, that reflects on ROCE. So all that elements, these three are like important standards that cover, ratios that cover a lot of elements, right? So touch upon every element of the ratio. ROCE, if you're touching about that, profit before interest and tax, and capital employed. You touch upon equity factor, you touch upon debt factor. How equity has changed because of revaluation model, right? How if it was cost model, revaluation would be different, right? So likewise, you have to critically evaluate and interpret at least 3 layers deep. That's why I always tell you, right? Root cause analysis at least 3 levels deep. Okay, that should be the way you interpret.
So how they see the continue for how they mark?
So interpretation is getting you around 10, 11, 12, 14 marks. Yeah, 1, 2, 3.
So I'm on 45.
14 marks there. 14 marks, 3 marks for calculation of ratio. You're getting 3 marks there. That's very easy, no? Calculation ratio, that's very easy.
But I mess up on that side.
Try to show the workings in that case. At working there, step by step on, right? 0.5 for every ratio. So show your workings. That's very important. Please don't not show your workings. Very, very important. And always be ready for section. Now with this A here, A there, both were standard based questions that required a little bit theoretical understanding or explanation. Always be prepared for such questions also. Okay. So please, these are the final moments that you all can use before you all go into the exam and do the exam, right? And when you are, one more tip I want to give you, when you are preparing statement of financial position or any items, always use the highlight feature from here, right? Use the highlight feature to highlight the figures that you've already used, right? You select this figures and you highlight them if you have already calculated them, right? So there will be an option to highlight. Now there is a tab, so it's not allowing, but you can highlight, right? It's not highlight. Yeah, I did press highlight, but that's not working. Anyway, so you all will be getting the option to highlight. Please use highlight as you all have recorded the figure to avoid duplication. Highlight and keep, okay, I've used this figure. So in the exam pressure, you tend to duplicate a lot, right? So to balance on the pressure, please use whatever the features that are given. Okay, so wishing all of you all the very best for your FR exam. I'm sure with all the practices we've done, with all the practices that you all have done, with all the learnings that throughout we have extracted and learned, we will be able to get through the exams, all of us. Okay, so please make sure these final days, right? Exam is on Thursday. Yeah, Thursday. Yeah. So Monday, Tuesday, for you, Wednesday, 3 days. Remember, is it morning? Thursday morning? 11:30. 1:30 morning, what time? 9 a.m. Right. So if you're going on the Wednesday morning, Thursday from 3 p.m. onwards, stop studying. Keep books away and relax. Wednesday. Right? After your exam, you come back from your exam. That's also morning exam. No? So FR, just spend around 3 hours just to revise if you want to. Otherwise, don't. You also, Wednesday, 3 p.m. onwards, don't do anything. Especially on the exam day morning, don't touch the theory.
What I do?
No, if you do that, your brain is already going to be exhausted. Because when you read a lot, when you try to think a lot, your brain is already exhausted. So when you go to the exam, you won't have the capacity of thinking and reading as much as you had, right? So don't strain your brain. Don't exhaust yourself. Get a good sleep, a very good sleep, and go to the exam. 1 hour before the exam, be there. Don't touch books, don't touch theories. If there are short notes that you can just have a look through while you are traveling, that's okay, right? But don't go to read too much and practice questions on that day morning and the prior day evening. Just enjoy, relax, do the activities that you like to do, right? Spend some time relaxing so that your brain is in the peak capacity when you go to the exam, right? You'll be able to perform at your best. So what you need to remember is your performance at the exam needs to be confident. You need to be very confident with your performance. You need to know that, okay, I have performed my best. I have given my best, right? Because if you have given your best, you are definitely going to pass. Getting 50 is not difficult. You saw? Do you think whatever questions we discussed, was that difficult?
Me, my problem is me.
Yeah, you are a problem. So you can't fix it by, you have to change your mindset for that, right? So questions are easy. Just that you should know the nitty-gritties of the standards. What you do today, as you are traveling in train today, go open the study plan I've given you all. Just refer through the notes that I've given, right? And then see whether can you relate to what is being told there. If not, now you see in that contingent liability, how impactful that was for pre-mark, right? IFRS 5, whatever we discussed today, in that if you feel like, okay, this is standard I need to pay attention on, IFRS 15, right? So if you think that you need to pay more attention, pay attention there, right? Do that.
Shall I do questions now? We studying theories.
Are you comfortable with your calculations? Good with calculations? Sure. How are you going to tell that without doing any mocks?
So I do about 20 questions, 16, 18 questions correct.
Right. So that's the A and section A and B, right?
Yeah.
Section C questions. Focus on section C.
So for me, maybe theory.
Yeah.
Usually that's what I should.
Yeah. So you focus now. You all should know what are your strengths, what are your weaknesses. Now for you, section C question. Focus on section C questions. Mainly interpretation is what I see is a challenge for you, right? So focus on that. See how to interpret. Read a lot of interpretation answers, right? Interpret and try to read and see how well you've interpreted. Yeah. All the best, right? So reading helps a lot. So if you, let's say, if you can read at least 20 interpretation answers, now at this point you can't try everything, right? So try to read the answers of all the interpretations, 20 questions at least. Have you read the examiner reports of whatever I told? All the examiner reports of all the papers that we did? Read examiner reports, that's also key, right? But right now there is not much time to redo a lot of reading either. So what you have to do, what I would recommend you to do is 20 questions, select 20 questions and read the answers in how they've interpreted. So that would actually wire your brain towards interpreting better. Okay? Sure, Amani, all the very best. Please update me how the paper went. I'm rooting for all of you all. I'm praying that all of you all get through the exams and come back with great marks, hopefully, inshallah. So please keep me updated as to what your results are, how the exams went, and what you all felt after the exam. And after the exam is done, forget it and don't try to think, okay, what went wrong, why I did that. Done is done, done and dusted, right? So that's why I call it done and dusted. So after coming back from exam, don't try to open the books and see, okay, did I do this right, did I do that right, did I go do this wrong? That's just going to stress you. Once the exam results are released, you would know how well you've done or how I'm sure you will do well, right? So all the very best, guys online, guys on YouTube, and physical guys, all of y'all, all the very best. Mervin, provision warranties, right? You wanted me to explain provision warranties. I've just seen your message here. Mervin, you can actually get in touch with me. Right. If you have any doubts, you can get in touch with me. If you are a PPIM student, you would have my contact details. But is there a possibility? Let me. Mervin, is there a possibility for you to join through Zoom? I'll share the Zoom link maybe, so I can share with you my contact number. Hmm? Hmm? No, if I say it, I mean, it's a contact numbers being recorded on YouTube. That's a private information. Yes, it's on YouTube. So Mervin is a YouTube student. So Mervin, I'll share with you the link. Do you have the link, Umar, for today's lectures? It's the same link, right? If our live classes link, same thing. Sure, right?
No, sir. This one different.
Experts group, no? Right? So they, in that group there would be that link, no? Experts. Yes. Right, so those who want to get my contact details, you all can actually join this link that I've shared right now, or you all can reach out to me on LinkedIn. LinkedIn, I can give you all my contact details there, and you all can connect to me through LinkedIn, right? Let me show you what my LinkedIn profile is.
Okay, sir.
All the best, Umar. Don't be scared. You can do it, I'm sure. This is my LinkedIn profile. Right? Whoever is on LinkedIn, you all can reach out to me on LinkedIn. And once you'll reach out to me on LinkedIn, I can get in touch with you all, right? I can help you all out there. Yeah. Yep. This is a profile. Okay. All right, guys. All the very best once again. I'll see you all in a future lecture maybe, and I'm wishing you all the very best. Any questions, any last moment understanding, clarification, doubts, whatever you all have, or motivation tips, you all can reach out to me. Just drop a text if you're feeling down. So I'm feeling down, what to do, what not to. I can always be there to help you all out. All the very best. And signing off, your FR tutor for this batch. All the very best.